Welcome to today's video tutorial where we're going to go through the pros and cons of buying Bitcoin and cryptocurrency through a CFD and FX broker. And really we're going to cover the number one reason why you might want to do that versus buying it through an exchange. Now the number one reason that you'd want to buy Bitcoin or any cryptocurrencies through your CFD broker is the ability to go both long and short. Now, if you buy your Bitcoin or any cryptocurrency through an exchange, you can only buy long. So if you're going through Bittrex or Binance or Kraken or Bitfinex or any of those, typically you can only trade those long, which means you can only accumulate them, buy them, or just sell those positions that you currently own. Now, when you go through a CFD or an FX broker, you do get the potential to short and go long. So short selling means that we have the opportunity to profit as the market falls in value. Now, as you can see, I have an MT4 chart open, and down the bottom here and across the bottom here, we've got Bitcoin, Ethereum, Ripple, Litecoin, Dash, and Bitcoin Cash, and so on, just for ease of looking at different markets. I also have the Aussie 200 there, but of course, we're going to be focused on the cryptocurrencies here. So the thing with the number one reason why you would want to look at a CFD or an FX broker is the ability to go short. Now, obviously, this run up through here, buying long was an absolute goldmine. Obviously, if you owned anything long and you held onto it through that period, you know, we're seeing the price of Bitcoin rise from 5,000 all the way up to highs there at around the 19,150. Now, since that point, which was the 18th of December, it has actually taken a nasty fall down through there and so on, even through here. Now, there's a lot of swings, as you can see through here, and even just in this period here, that was a high of around 8,474 down to a low of around 5,873. Now that's just over 30% downfall in a couple of weeks there. So each of these candles is one trading session. So as you can see, that's fallen quite significantly. So by trading with a CFD or FX broker, you're able to take advantage of these down moves just like you can with the up moves, depending on your trading strategy, of course. So there is an advantage to doing it that way. And of course, as a trader or an investor, you want to have all the tools in your toolbox, and the ability to go short is definitely one of those. Now, even more so, more recently with Ethereum going down from $770 odd down to 272, these are significant price drops. Even if you were just looking to use a CFD or an FX broker to hedge your existing underlying positions, which means you own the physical, that would also be a possibility for some people out there as well. Now, there are a couple of things that we need to take into consideration when we're doing this. Now, the first one with short selling is the fact that you can expose yourself to unlimited losses. If you happen to, which wasn't available at that time, but during this run up through here, had you have been short, you would actually, and you didn't close the position, so that's a real problem when it's going up against you. You do have the potential to have unlimited losses, and that's one of the problems with short selling. So you need to be very confident in your ability to trade and use stop losses. So you've got to be comfortable with using stop losses. If you're not, and you're not willing to close a position that's going against you, you can stand to lose significant amounts of money, certainly more than what you start with. Now, the other thing as well, when it comes to cryptocurrencies with a CFD or an FX broker, they work in terms of margin and leverage. So typically, if you're trading any Bitcoin or Ethereum or Ripple or any of those, you only need around 10 to 20% of the total position as margin. So you only need 10 to 20% of the money up front in order to control the whole position. So if you wanted to buy, say, $20,000 of Bitcoin and the margin was 10%, you'd only need 10% of $20,000 up front, so $2,000, to control the full $20,000 position. Now that's leverage trading, which is also a double-edged sword. It's great if you're winning, but if you're losing at a much faster rate, and you do open yourself to the possibility of losing more than what you start with. So these are very, very big issues that you need to contend with. So you do need to be very comfortable with using stop losses. You will experience significant losses if you're short and you don't close and the position is rallying against you. Even just through there we're talking about big percentage gains through that period there, of course. Now, the other thing with short selling and using or going through a Forex or CFD broker is the fact that you're not buying the underlying. You don't own the underlying cryptocurrencies in this case. So you've just got a contract with your broker to buy and sell them at that price. When you close it, you close that contract off. So if you're looking to accumulate the underlying, such as Bitcoin or Ethereum or anything like that, then CFD and FX brokers wouldn't be the way to go. So just to sum up, the number one reason why you might want to consider a CFD or an FX broker to purchase your cryptos is the ability to go both long and short. It's the short selling that is the key, but always keep in mind there are some significant challenges that you need to make sure you're comfortable with before you go ahead and do that. Hopefully you found this tutorial helpful, and if you did find it helpful, please hit the thumbs up button and subscribe to the channel when you get a chance. Thanks.